Today is going to be a big day out there today as we have the FOMC statement coming out at 2 p.m. However, I'm going to share with you guys a Fed chart that shows a recession could be imminent. Now, if we start off looking at the markets, if you guys have paid any attention to the markets overnight, you can see they are up across the board. We have the SPY up 1% on the session. We have the QQQs up 1.6% on the session. And yesterday going into the close, as soon as Microsoft came out with the earnings, Microsoft was down substantially, and right now in pre-market, Microsoft is still down 3% on the session. Let's not forget, right now we are still action-packed in earnings season. Yesterday we had AMD, Microsoft, and Starbucks after hours, but today we have another set of big ones as well. We have Meta, ARM, Qualcomm, just to name a few, and then on Thursday we have Amazon, Apple, and Intel. So right now we are in the thick of earnings season, and we look at the expected movers out there for today. ARM, Etsy, Meta, Qualcomm are all expected to move 8% or more, with ARM expected to move plus or minus 12%. Now, if we look at this chart of the dollar yen, look at this, absolutely falling off a cliff. And guess what? Last night, the BOJ lifts rates as the Fed inches towards cutting rates. If we look at one of the reasons why the BOJ decided to hike rates, it was very simple. The yen was way too strong and they wanted to bring it back. We already know that the BOJ has intervened a couple times trying to get some strength into the yen and get the dollar yen coming down. Well, last night, that's exactly what has unfolded. And so far, the markets around the world has cheered it. Stock market investors want a Fed rate cut, but not a Wednesday surprise. And what this is going on to say is some people are like, hey, we need Jay Powell to cut rates today at 2 p.m. Well, I don't think that's going to be the case. And if Jay Powell does come out and signal a surprise rate cut today, do you guys think that's actually going to be bullish for the market, or do you think it's going to be bearish? Because think about it, the Fed only cuts rates because something is broken, not out of the goodness of their own hearts. We look at the Fed watch tool and we can see there's a 96.9% chance the Fed does nothing today. But when we look at the September rate cut, we can see from there on, we see that the Fed goes on an aggressive rate cutting campaign, which is exactly what this article right here is essentially saying. The yield curve fueled recession indicator from the Fed shows a 70% probability of a downturn. Here's what the author goes on to say. And what it goes on to say is essentially they're looking at the three month versus the 10-year yield. And when you look at this, look right here, we hit 80%. Right now we're sitting at 70%. Every time we have been up here at these levels, it has signaled a recession in the past. Look back here in 2001, we had the dot-com bubble burst. That we're up right around 70%, boom, crashed down. Up here during the great financial crisis, we were only at 50%, boom, look at where we are today, right? Everybody thinks that the market can only go up, but watch out, at some point, we are going to see a substantial drop in the market. And unfortunately, we're going to be in a recession. That's not going to be good for the economic outlook. Now, this morning, we have a lot of news coming out. We have ADP, non-farm employment change coming out here in just a few moments. Then at 8:30, we have the unemployment cost quarter over quarter. 9:45, we have Chicago PMI. 10 a.m., we have pending home sales. 10:30 crude oil inventory numbers, but then at 2 p.m. we have the Fed funds rate along with the FOMC statement. Then at 2:30, Jay Powell is going to be taking the podium. Is Jay Powell going to be hawkish or is he going to be dovish today? You guys let me know what you think in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, yesterday, Microsoft came out with earnings after the bell. Microsoft disappointed and the market went down. MACD indicator still looks horrible. We look over here at Meta. Meta yesterday was also down, but in pre-market is up slightly. We look at Nvidia. Nvidia was down, but look in pre-market. Nvidia is now up 7% on the session. Is this the low for Nvidia? And Nvidia is going to start to rally back up. Essentially, from the high down here to the recent low, Nvidia is down 30% from the highs. And is that all she wrote? Is Nvidia going to continue to go lower, potentially filling these gaps? Or are we going to see Nvidia starting to rally back up? We take a look at SMCI, and in pre-market, SMCI is also up 5% on the session. Yesterday after the bell, AMD had earnings, and right now in pre-market, AMD is up 8.15% out here in pre-market. We look at the dollar index this morning. Dollar index is currently down 32 cents on the session. You guys can thank the BOJ for that. Now, a weaker dollar normally will favor the bulls in the market, but we also want to pay very close attention. What is the 10-year yield doing? Right now in pre-market, the 10-year yield is slightly lower. And today, I expect it's going to move substantially after 2 p.m. when the Fed funds rates comes out. Now I want to come over and look at gold, and notice gold has been able to so far bounce off the 61.8 fib level. Now it's looking more and more likely that we're going to come back and challenge all-time highs. Now, if we get back up towards all-time highs, guess what? We are probably going to break to new highs. We go ahead and we measure A to B equals C to D pattern, and we can see that pattern would actually go ahead and complete all the way up here at 25.86. Now, if the Fed does go on an aggressive rate cutting campaign in the near future, that should weaken the dollar. Now, will we see gold also start to rally as the dollar starts to weaken? That would be the likely outcome. Then we come over and look at crude oil real quick. So far this morning in pre-market, crude oil is up substantially. We got crude oil right now up $2.66. Now, if we look at this, if we go ahead and we grab our Fibonacci retracement tool and we measure from swing low to swing high, notice we came right down towards that 61.8 Fibonacci level. Now, this would be an area where we normally would look for a bounce in the market, and we'll see if we can come up and take out the swing high over here. That would actually say crude oil has a chance to go substantially higher. If we go ahead and we measure the A to B leg, the B to C leg, and we project up here for D, we can see that would bring crude oil all the way up here to $87.18. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, past in as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Then we jump over and look at the diamonds in pre-market, and out of all the indices, the diamonds is probably the weakest this morning, only up 27 cents on the session, or up 0.07. We also take a look at IWM, the Russell 2000. We can see right now in pre-market up $1.56. And we look at this could be nothing more than a bull flag pattern. Here's the flag pull, the impulse move, and then we have this consolidation that has been being built. Are we going to see the Russell 2000 and the overall stock market go rallying up today? Or is Jay Powell going to extinguish the fire? We come over and we look at the QQQs real quick, and what do we see? Well, in pre-market, it looks like we're going to have a massive gap to the upside unless some of this news before the market comes out can bring the market down here just a bit. I've been warning you guys about the MACD indicator. It's been extremely weak for quite some time. And on the 4-hour chart, we can see the MACD indicator is trying to firm up down here near these levels. Now, right now in pre-market, we can see that we've already had a double bottom pattern. If we can break above the swing high at about 468.18, guess what? That would set up that we have higher prices to come. And that would give us a price projection all the way up here at 482.25. And guess what? That would also fill the gap that was left behind from last week. Then as we dive down, look at the 1-hour chart. You can see as we've come down to make a new low, look at the MACD indicator. It's making substantially a higher low at this moment, which is divergence, which indicates we are likely going to get a bounce. And that's what has unfolded so far. We look out here on the 30-minute chart. Yesterday you saw we were up near the zero line. We pull back. We have that same divergence on the MACD indicator. If I simply draw a line connecting the lows of the MACD indicator, which way is it sloping? It's sloping up. What does that mean? That means prices should try to bounce on the way back up. And in pre-market, we have one heck of a gap on the way up. Now, if we look at value area high, that comes in about 459.88. The point of control is going to be down here at 457.36. And value area low will come in at 455.31. So how do we want to play this? Well, one, if we're above value area high, then guess what? We're likely going to go higher. And the fact that we have the gap over here along with this structure breakdown point, I still think this is where the market is trying to work its way towards. However, are we going to have any signs of a pullback this morning? One area I do want to watch, and this is going to be relevant for today, and with the Jay Powell and all the other news, would be this minus development area right here. I want to watch this. One, this could act as a magnet point. And what I mean by this is the market can be attracted down towards here, and then we reject up and out. As we have a lot of news, we should get some volatility, which means back and forth in the market. Now, the minus development area comes in from about 459.75 all the way up here to about 461.24. So if you see any sell side trades and you are an aggressive trader, this could be, but if you stick by the volume profile principles, we are above value area high and the path to least resistance should be higher. As we jump over and look at the futures markets real quick, you can see we made a new low. However, we are now almost right back up towards this swing high over here. And we'll see, can we push into the minus development area today and even make it all the way towards this structure breakdown point? We have not made it yet, but this is still going to be a point of interest, which should attract the market back up towards that area. Now that zone is about 19,660 all the way up to about 19,698. Then as we come over and look at the daily chart, look what we did last night. Last night, we have had one heck of a move. We have had a 399 point move from yesterday's close all the way until the current time. And if you notice, we've really had zero pullbacks in the market. Now, anytime the NASDAQ is up 100 points or more, I expect some type of pullback. Now, pullback doesn't mean we erase the entire gains, but a little bit of a pullback would be warranted. And if you guys notice, we are above yesterday's value area high. So as long as we're above that, that indicates we are likely going to see higher prices. But I want to show you guys how we can actually use this for a target as well. As we're waiting for the overnight volume profiles to develop, if we break above the overnight value area high, then we start coming back lower. We can use these levels as targets, but we can also use value area high as an additional target as well, which we'll talk about here in just a bit. Now, as we come over and look at the SPY, notice one heck of a move out here in pre-market, up almost 1% on the session. MACD on the daily chart looks horrible at this moment. On the 4-hour chart, MACD indicator looks like it wants to firm up a bit. And again, my eyes are really focused on the gap above us. We come over, look at the daily chart. We can see we have huge divergence like we talked about with the NASDAQ as well. Then on the 30-minute chart, you can see that divergence playing out as well. If we connect the lows right over here, we can see that the lows are sloping upward. That indicates we are likely going to see higher prices. Well, right now, we already see that coming true. We are way up here, almost above yesterday's high as well. Now, if you look, value area high will come in about 543.56. The point of control will be down here about 541.72, and value area low will come in at 540.15. Now, I do expect the market will be up today. That's just my gut feeling. And I want to look at this. How can we get involved in this market? All right, the market seems like it's already run away. Well, one of the areas I would want to focus is just above value area high. Actually, value area high to right above the top of this minus development area. Now, do we get it or not? I don't know, but that zone comes in anywhere from 543.53 to about 543.84. This is an area that I would love to see the market retrace back towards and then reject out. Now, how could that happen? Maybe that happens when Jay Powell takes the podium. Maybe the market gets a knee-jerk reaction from some of the news out here this morning. Regardless what it is, if the market makes it down towards this zone and we start to see rejections taking place, this is an area where I would definitely want to get long the market. Then as we come over and look at the S&P futures markets, notice we still have that structure breakdown point right over here. We have been unable to get into it this week. One, that should act as a magnet, but two, this could be a little rejection point where the market turns and starts to go back lower. That zone is anywhere from 55.42 to about 55.52. So keep an eye on that zone. You can also see we have a double bottom pattern. If we just map out, where would this double bottom pattern play out if indeed we can break the swing point over here? That would give us a price completion all the way up here at 56.33. Now, the double bottom pattern doesn't indicate we're going to get there today. It may take a couple days. Maybe we do it today. It depends on, how the news unfolds. But given the fact that we've already had such a substantial move today, I highly doubt that we make it up another 100 points from the current price point. But who knows? Crazier things have happened. And if you look overnight, what have we done? Just straight up, we have had zero pullbacks overnight. This is very abnormal, and a pullback would be warranted at any moment. If you look at yesterday's value area high, it is substantially lower than what we're currently trading at right now. So one way I'd want to play this or use this level would be if we start to see weakness in the market and we start violating some of the overnight volume profile levels, this could then become a target location. Notice overnight, we got very poor structure right over here in the profile. And I'm going to go ahead and mark this off real quick. Anywhere from down here at about 54.98 up here to about 55.06. This is one, could act as a magnet, but two, if we get down in this area and we start showing signs of strength, I want to see, can I get a rejection back up and out of this pattern? So far overnight, there's been zero pullbacks. All right, so we've already had some of our news come out today. The non-farm employment change came in at 122K versus 147, previously 155. Another sign things are slowing down. Employment cost came in at 0.9, and at 945, we have more news coming out. Now, what do you guys think? Is the market going lower? We have now squeezed up from the opening price, 489 points for the NASDAQ. This is a large, very large move out here for the overnight session. If we come over and look at the S&P 500 is up 70 points out here in pre-market. So with the NASDAQ being up 2%, that is one heck of a move on the way up. We come over, we look at the volume profile levels. We have value area high coming in up here at 19,351.50. The point of control is way down here at 19,213.00. Value area low coming at 19,107.00. Now, the way I would prefer to play this is, wait, can we break above value area high? If the answer is yes and we break down below it, that signifies we should likely look for a sell side, maybe down towards the point of control. Now, is that really that far-fetched? Because if we pull a Fibonacci retracement from the swing low all the way up here to the high, the 38% retracement is darn near the value area low from the overnight. Now, in the event this does occur, we can use some of these other distribution nodes as potential targets. I don't know if I want to swing the big move straight down, especially on FOMC day, but we also want to pay attention to some of yesterday's volume profile levels as well, as they can provide additional targets to this market. We look at the S&P 500. This is one heck of a move. We've had a 91.5 point range overnight. That is absolutely insane. We look right now, we are currently trading above the overnight value area high, which comes in at 5529.25. The point of control comes in at 5525.75, and value area low come in at 5484.25. This is one heck of a move on the way up. There has been no pullbacks along this way. One candle, oh, no big deal. One candle, no big deal. One candle, no big deal. Can we get multiple candles pulling back today? We're going to have to wait and see, but you guys know the MO. As long as we're above the overnight value area high, there is no need to try to be a hero and try to short this market. Right now, it is just on a straight squeeze out all the shorts type of move. And if you guys want to learn how to trade double bottom patterns using order flow, watch this video right here.